Hey guys, it is me. It is TK Barlow from the Barlow Group Tax and Accounting Firm. And today we have a very special guest, and she's going to be sharing with us some of the triggers and some of the red flags that you need to be watching out for when it's time for you to actually file those taxes. Okay. So we're just going to be chit chatting today. Let me change this really quick. All right, we have that one. Making sure that we are live in all of the right places. One more thing. Seconds. Okay. All right, that's better. So we are going to be talking about some of the red flags, some of the things that you really need to look out for when you are, first of all, when you are choosing a tax professional to really help you navigate your way through taxes. That's one of the things that you should be concerned about, is being able to choose a tax professional that is really able to help you in your situation, because unfortunately all tax preparers are not made equally. And so the first thing is definitely finding a good support, someone that is able to really help you answer your questions, that's really able to help you maximize your tax deduction. And so if you are needing someone good in your corner, please reach out to us, because we have an amazing team that can really help you maximize that refund and get back what you are supposed to, so that you're not leaving any money on the table. All right. So we're going to get started. We have our very special guest today. She's also a part of our tax team. You want to go ahead and introduce yourself?
Yes, thank you. I am Deidre Minor. As TK said, I'm a representative with the Barlow Group accounting firm. And today I'm here to discuss avoiding red flags in business deductions, basically so that you cannot cause any trigger audits or penalties by claiming overinflating your deductions. So,
Right.
Yeah.
And one thing I wanted to that we can start by saying is that you don't really even necessarily have to have a red flag to go through an audit. Like sometimes the IRS will just randomly select you. And so if you are even randomly selected, we want to make sure that all of your things are in place, all of your I's are dotted, all of your T's are crossed, because nowadays it doesn't have to be, a red flag or a trigger that would get you audited, but it could just be a random audit. And so even in that case, you want to make sure that you have done the necessary things to where you are able to take these deductions and do the proper things that you need, so that you're not raising even a bigger red flag, Okay, we're ready. But dive in. Let's go.
Okay, let's start with, I kind of broke it down into I'm going to talk about one category today, overstating or inflating the deductions. So one of the things that a lot of people would like to do sometimes so they can maximize their refund is claiming too many expenses compared to the business income.
Oh, yeah.
So,
that's good.
Yeah, that's something that, of course, my dog would like to chime in at the inappropriate moment. So please excuse him. Also, reporting sick. Okay, I do apologize. I know that we're live, but TK, I'm gonna have to maybe mute for a minute. I have an unexpected guest that has my dog.
I can barely even hear him, so it's fine.
Oh, you can barely hear him. That's great then.
Yeah,
he's coming closer. Okay. So that lets you know we're authentic and we're live here, right?
It's okay.
I want to go back to the claiming too many expenses compared to the business income.
Okay.
With you being an expert here in the room and my mentor, can you kind of give us some examples of what that too many expenses may look like, one or two, that may be something that's not talked about as often?
Absolutely. So when you're looking at those expenses compared to the income that you're bringing in, only so many deductions is going to help you lower that tax liability. It's going to get to a certain point to where you're going to either to where you're going to zero out basically. And so
Mm-hmm.
when you don't have a lot of income for your business, let's say you just started your business, or maybe you're in your second year of business and you don't have a lot of income, but you have like crazy amount of expenses. Like, you want it to still be within reason. Like, you don't want to go out there and just try to deduct everything under the sun. But a lot of people will definitely raise a red flag when they're bringing in zero income and then they have like $30,000 worth of expenses. Like, that's not logical. So you do want to be within reason when it comes to those deductions. You don't want to abuse the system, but as long as you have receipts showing what you have purchased, maybe you did just start your business. Maybe you had to buy equipment that was like a $30,000 purchase, and unfortunately, you haven't brought in any income yet. So, in a situation like that, you definitely want to have those receipts because that will raise a red flag to the IRS. But if you have those receipts to back it up, you're going to be fine. But what you don't want to do is, just go writing up stuff saying, hey, I did this, and this, and it's not legitimately, or if you don't have the receipts to validate that, then yes, that is definitely going to be a problem when it comes to the IRS if you are overdoing it when it comes to your deductions. Okay, so we definitely want to be careful when we are taking certain deductions. You definitely want to have, a tax professional there with you that's able to kind of walk you through the whole process so that you're not overdoing it and raising a red flag. But the key to try to protect yourself is to basically make sure that you have your receipts to back up all of your purchases.
Well, thank you for that. As you were talking, I was also thinking about another way of maybe triggering an audit would be reporting significant losses year after year.
Yeah.
So yeah, that was something that
when you're coming close to like that 5th year mark that you have been in business, like that's when you really want to consider, like, first of all, as an entrepreneur, the end game for most entrepreneurs is not to get a refund back. Unfortunately, when you are in business for yourself, the days of getting back a refund are kind of like far in between. So the goal for an entrepreneur is to, like, you want to be able to either break even or just get to a point where you're paying the minimum amount of taxes possible. And you're able to do that through doing tax planning, through implementing tax strategies as such as, depreciation, writing off your expenses. So you are able to do it. You just have to know how to do it and how to do it legally. So within those first couple of years, the IRS they're going to expect that you are going to come up at a loss. When you're first building your business, you're going to come up at a loss because you're investing, you're trying to get it off the ground. But, between that 4th and that 5th year, that's when you want to start either breaking even or just paying a minimum amount of tax. Like, you don't want to come up at a loss so many years in a row, because that's going to look like, okay, they really don't, you don't want to raise any type of concern when it comes to that. So around that 4th or that 5th year is where you're just trying to really break even or, pay the minimum amount of taxes as possible.
And I'm so glad you brought that up, because there are a community, I don't know if you would call it a community, but there are some people that really believe that you can file and expect, you can file that you have so many losses years and years and expect a refund. So when you said that when you're in your own business and you should not be expecting a refund, I don't know if you said it like that, but you get what I'm saying. I that is something that's new for a community of people that I've been talking to, a certain group of folks. So I'm glad you brought that out today. That's very important to know. The other thing that another thing that I want to bring up is deducting personal expenses as business expenses. There may be some that think that maybe they could kind of slide through with that. Vacations. How can you determine whether or not a vacation is a business trip? So there may be some things where deducting personal expenses can be practiced and cause an issue along the way. So
right, because we see a lot of stuff like on Instagram, on TikTok about how to kind of make those personal expenses business expenses. But when you're trying to do that, you have to have a paper trail. At the end of the day, the IRS, they want to see a paper trail, because it's your proof of burden. Like, you have to prove to them that it was a business expense. And like I shared with you guys, one of our meetings, that I did a cruise and I was a speaker on the cruise. So it was definitely a business trip that I had to pay out of pocket for. And it was on more than one day. Like, the entire cruise was around this, it was a seminar that it was having. And so when you're doing that, and when anybody, writes off a cruise, they're gonna be like, a cruise, really? So that could raise an eyebrow. But what I have is, I have the itinerary, I have all the email correspondence about, when I was speaking, the duties that I done, like, to prepare for to help with the seminar. So all of those things, that's my proof of burden. And so when you're having something that can be looked at as personal, that's all you have to do, is just make sure that you have that paper trail and that proof of burden. Now, anything else, such as like expenses, like maybe your cell phone expenses, maybe like your internet, things of that nature, what happens is, when you're deducting those as a business expense, you have to deduct the percentage of that usage that you're using for business. Like, for my cell phone, I use my cell phone a lot. Probably about 75% of my cell phone usage is business. And so I would take the total amount that I've spent for my phone for the entire year, and then take out 75% that is used for business, and be able to write off that 75% total and use that as a deduction. But so, because some things will intermingle like that, but you just have to be able to write off the business portion or the business usage of that item that you're trying to write off.
Okay. I'm going to move to a next topic that should have been very popular up until probably now. Using your home office as a deduction.
Yeah.
So, working from home, and even if you're, as a consultant, it's the fine line of trying to decide or making sure that you are writing off the right amount of business deductions when you're working from your own home or have your home office.
Yeah. You see, a long time ago, people were so afraid to take the home office expense, because they felt like, when you take the home office expense, that was an automatic IRS trigger. But that's not true now, because there's so many people that actually work from home, and especially after COVID, is even more people that work from home. And so with the home office expense, it's two different ways that you can do that. You can do that as you can take the standard amount, which is, I think, is either 300 or 500 square feet. I can't recall right now. But it's either that standard amount, or you take the itemized amount, to where you are writing off a portion. Like, so whatever portion of your home office that you're writing off, you're able to write off any type of utilities. You're able to write off any type of mortgage or rent. So you're taking that same portion of the usage of your entire square footage of your home, and then you're able to itemize even further if you want it. So it's two different ways to be able to write those off. But yeah, that definitely adds up for those of us who do work from home. Now, if you're doing that, you have to also, abide by the rules and the regulations to be able to take that legally, which is, your home office space has to be a dedicated space just for your office. Like it can't be anything else. It cannot be a bedroom. It cannot be a kitchen table. It cannot be the living room. Because I had my office in all of those places. But you have to have a dedicated space. So it has to be a room just for you to work and do your business operations out of there. Whether that's following up on emails, doing your marketing, planning, whatever it is. It has to be just that dedicated space for you to do that, and you're able to write that off.
Okay, that's some good information. Going back to just having a dedicated space, and I know that some of the homes now are built with as an off. You have a house. I'm sorry, your house. The homes are built with your home office already designated for you. So, do you find that makes it easier or less challenging to decide whether you how to deduct those things when
Yeah,
you're
I think it's pretty easy. And then again, when I say like your home office, let's put more emphasis on the dedicated space, because you can have a shed in the backyard and that could be your dedicated space.
Okay.
It's just nothing else. Like nothing's in the shed. Nothing is no equipment. It's no cars. That's just where I choose to put my home office.
Okay.
So if you want to build something in your backyard and say, this is my home office and I'm using it just for my home office, then you're able to do that. So it doesn't necessarily even have to be something that is included or attached to your home.
Mm-hmm.
If you think about, converting your garage to your home office, a detached garage or a shed. I'm going to make this shed my home office. I'm going to, redo it so that it's able to accommodate my office. That's where I go to. So yeah, so I think it's pretty easy. I had one person that had a question because it was when you come in their front door, they had like their desk kind of set up, but it was in the living room. So it's like, that would be questionable, because even though you're not necessarily using it as a living room, you have your living room furniture in there. Your guests and your family come through that room. So I wouldn't say that was a dedicated space. Like, even though you tried to make it a dedicated space, you still got a lot of other activities that's happening in that room. And then you also have to think about this is you don't want your business information to be exposed to like anybody that's coming in and out of a door. So when you think of it like that, that may not be like a dedicated home office space. But when you have like a space that has a door on it that you're able to lock behind you, like we want to stay on that kind of thinking when it comes to what type of space should you use.
Okay. So as you were talking, I was thinking, so if you have a dedicated space, right?
Yeah.
You still have to consider the square footage when you are reporting these expenses for deduction.
Yes. Let me see.
Okay.
Because it is, I'm going to see what it's up to. If you take like the standard, just taking that standard deduction, let me see what it is. The standard deduction is 300 square feet. Okay. That 300 square feet is $5 per foot. So if you do the simplified option, that's just where we put it in the system that you have the home office deduction. You're using the space in your home. Then you can do the max is 300 square feet. But then if you do the regular method, now that's where you're able to also include things like your mortgage interest, insurance, utilities, things of that nature, if you have that going on. But even if you rent a home and you don't have mortgage interest, then you can still just take the simplified option and deduct up to 300 square feet.
Okay. Good stuff.
Mm-hmm.
So just kind of transitioning from the home office to the vehicles. So one of the things that seems to be a red flag that I've discovered is claiming 100% business use of a personal vehicle.
Mm-hmm. Yeah.
Yeah. Lack of mileage logs or receipts. Yeah, kind of guilty of that. And excessive luxury travel expenses without a business purpose. So you want to be aware of those.
Absolutely.
Yeah. So for the sake of time, because I'm enjoying this. We're 20 minutes in, but
yeah. So
okay, go ahead.
With the vehicle expenses, it kind of works just like the home office too. You have two different methods to be able to write things off. Either you can take your business miles, not personal miles, but business miles. You can take that and you can write them off that way as far as like your vehicle the usage that you have driven around for business purposes, or you can do the simplified option as well. Not simplified. Let me see what it is. But to where you're able to take like any type of maintenance that you had, if you had to replace tires or oil changes, things of that nature. So you have two different ways to do it. Either you're able to itemize and break down any type of maintenance, or you can take the business miles. Now with us, when we have for our clients, if you have both, then we're going to see which one is going to give you more bang for your buck. Is it best for you to list all of your maintenance, or is it best for you to just take the mileage that you've driven throughout the year? So, but you do have an option there. And one thing that you mentioned was those mileage logs. Yes, they are super, super, super important. In the case of an audit, the IRS is going to want to see your mileage log. And basically, you're just putting in all of your business errands that you may have ran or whatever you was doing for business purposes. Like that needs to be listed, like with the time, a date, a location, like ready you go. Like you want to be able to have those things on paper so that you're able to report it in the case of an audit.
Okay.
Yeah.
All right. Moving along, what about something about, let's talk about cash transactions and unreported income. So you definitely failing to use a 1099 as an independent contractor is something that you want to stay away from.
Mm-hmm.
Would you agree with that?
Absolutely. Because what happens is, what people don't know is that your W-2, your 1099, when you receive that, the IRS is getting a copy of that as well. So when people are trying to get taxpayers to fudge their numbers and make this look like this, or they're trying to manipulate the system, what they don't understand is that every document that you have received, your 1099s, your W-2s, the IRS has a copy of these. Like when we issue out, from our business, when we issue out those 1099s and those W-2s, one goes to the client, then one goes to federal, one goes to the state. So everybody has those numbers. So when people think that they're getting over and not reporting something, leaving off a W-2 or leaving off a 1099, they're really not getting over. Because what the IRS is going to say is, hey, you underreported your income. You need to amend your taxes, or they're going to amend them for you and tell you what you now owe in taxes because you did not report a certain income or a certain 1099. You decided to leave it off. So when people are thinking that they're trying to get over on the system, they're really not. The IRS is going to catch up. So yes, it's important to make sure that you have all your 1099s, make sure you have all of your W-2s. And the way that you're able to check this is to create an account, an IRS.gov account. You want to look in there, look at your transcripts, look and see how many 1099s you've had, all of that stuff. Like you want to be able to look at it for yourself and let your taxpayer know, hey, this is what I have. I have this W-2 income. I have this 1099 income. Can you make sure that we have everything accounted for? Because what you don't want to do is leave anything off. You get your refund and then you have to owe money back because something was underreported, and then you owe taxes off that money that you didn't report. So that's very important.
Okay. All right. Thank you for that. So I'm moving along to charitable contributions and sponsorships. You have to be mindful of not to overstate your donations without receipts.
Same thing. Yeah.
And claiming sponsorships that are actually personal gifts. And maybe using business donations for personal benefits. So those were some of the things that you may want to consider not doing.
Right.
Under charitable contributions.
Yes.
Now, this one was something that I'm like, okay, I hadn't even thought about as a taxpayer for all these years. Round numbers and missing documentation. So too many rounded off numbers seem to be a problem for the IRS.
Right. And they will. Yeah, go ahead.
No, I was going to ask you, you had any insight on that?
I mean, yeah, the IRS tells us that. Oh, hold on. Yeah. Hold on one second. Okay. Okay, sorry. So yes, so with those round numbers, the IRS gives us a list. Like if you go onto the IRS.gov website, you can see it in writing right there. It's in, black and white, I guess we'll say.
Yeah.
But they tell us that do not use round numbers. And because they know that when you are getting business expenses, like when you're buying things, it's not going to be likely that your receipt is going to have $300 or $500, but it's going to be something with some change, right? So you want to make sure that you're putting in those correct numbers when you are getting your expenses inside of on your tax documentation. So always, like the best thing a taxpayer can ever do is to make sure they're keeping their receipts. Like we don't have to be afraid of an audit. Like you don't have to be afraid of of getting in trouble as long as you have your receipts. Keep your receipts. That's it. That's the key to winning any type of audit, is making sure you have your receipts, making sure that you have some type of bookkeeping system in place, because that's going to be your backup. Even if you don't have your receipts, you can pull your bank statements. But if you have some type of bookkeeping system in place, if you are a business owner, then yes, like your best line of defense is having bookkeeping, because you can always go to the IRS representative who's ever auditing you and saying, hey, these are my books. This is my expenses. This is the day I did it. This is the time I did it. Everything is backed up with my bank statements. But if you don't have that, and you're trying to take all these expenses and you don't have any bookkeeping and you don't have any type of bookkeeping in place, that's going to be a problem. That's going to be an uphill battle for you to fight when you're trying to fight against the IRS. Same thing if you don't have a business, but you have a lot of expenses that are deductible for you as a personal individual taxpayer. Same thing. Keep your receipts. Like you have to keep some type of backup. You just can't go out there claiming everything all willy-nilly. Like it has to make sense, and you have to have some backup.
Yeah. Well, just to wrap this up on my end, I just kind of want to just throw out some best practices to avoid I can't even say it. IRS scrutiny.
Yeah, you got to break that again. IRS.
Yeah, IRS. Lord have mercy.
Yes.
So again, just to reiterate what she just preached to us is to keep detailed records. Now it should be easier to keep receipts because you can basically keep it all on your laptop instead of having paper trails everywhere. You want to keep separate business and keep separate your business and personal expenses. You want to use some kind of accounting software or professional accounting. And you want to understand your tax deduction rules before claiming expenses. So that's all I have today. Like
do you have your do you have your Calendly link?
Ooh,
I was trying to find
do not have that right in front of me. Let's see.
That's fine.
Let me try to find it.
Pull it up. But yeah, so those are the most important things that we have to be concerned with and responsible as, as taxpayers, first of all, and then especially if, you have a business, because that's more than likely your livelihood. That's how you bring in money to be able to feed your family. And so you would just want to be able to say to the IRS, yes, I have paid my business taxes. I've done what I was supposed to do when it comes to those taxes. And, and then everything will be okay. So in the meantime, if you need any type of support when it comes to your tax preparation, or when it comes to your bookkeeping, even if you have issues with tax debt, reach out to us, get on our calendar. You can drop a link below where you guys can drop, if you need any help, just put the word me, M-E, and then we will get back with you, or you can either DM me, and then we will definitely get you set up with a free consultation on how we are able to help you, how we're able to support you, and to make sure that you are maximizing those deductions and that you are getting back what you deserve. You're not leaving any money on the table. So yes, so to get in contact with us, please send us you can email us at hello@tkbarlow.com. In your comments, just put red flags, and then we'll get you set up with a consultation, or you can drop a me below in the comments and we will get you set up with a consultation as well. Okay. So
TK, do you want me to put my link in the comments as well?
Yes.
Okay.
Yes. If you can there, please do that.
Let's see what I did there. Okay, well, I cannot seem to do it. I sent it in a private chat to you. Maybe can you put it over there in the comments?
Yes.
Okay.
I got it.
Well, thank you guys for letting me speak to you for 30 minutes on this Saturday afternoon.
Yes, I think that was very helpful, and it's gonna, because sometimes people just don't really know. They don't have the resources, and so that's what we want to be, is a resource to help everyone, be able to take the proper deductions. Oh my God. I don't want to speak now. Sorry, guys. I was trying to put it in the comments, but so just to be able to help you and get the support that you need when it comes to making the right decisions and being ethical, as well as being able to get back what you're supposed to get back on those tax refunds. You don't want to leave any money on the table, but we want to be safe and not raise any red flags. So we do thank you for bringing these things to our attention, and it was great. And if anyone else have any questions, the link will be in the comments. All right. So in the meantime, cheers to your success, and we'll see you soon.
Thank you. Have a great day.